Transportation, Regulatory Concerns, and Future Generations, and the Committee on General Government Operations and Cultural Affairs now convenes this hearing. In accordance with the Open Government Law, public notices were sent to the media on Thursday, March 20th, 2014, and again on Tuesday, March 25th, 2014. Notice of today's hearing was also posted on the legislature's website beginning March 20th, 2014. For the record, today is Thursday, March 27th, 2014, and the time is now 2:06 in the afternoon. The committees will be conducting a joint oversight hearing of the Department of Revenue and Taxation and the Department of Administration, particularly on the subject of tax credits that's been in the media recently. I'd like to take a moment to acknowledge senators present. First off is the chairman of the Committee on General Government Operations and Cultural Affairs, Vice Speaker B.J. Cruz, to my far right. To his immediate left is Senator Brant McCready. To his immediate left is Senator Frank Uggan Jr. To my immediate left is Senator Lynn Yamashita. To her left is Senator Chris Duenas. Senator Tommy Morrison follows, as well as Senator Tony Atta. Thank you to all of my colleagues for being with us here today. Our two participants in today's hearing are familiar pretty much with how we conduct business here in the committee at this point. So I'll go ahead and forego the typical listing of all the different parameters of how we conduct ourselves here. I would like to invite them up to join us to testify, please. Director John Camacho of the Department of Revenue and Taxation, Director Benita Mengolotny of the Department of Administration, and also if we could request that the Sergeant of Arms designee please administer the necessary oath for us to be able to discuss financial matters of this government in this hearing. Thank you, Joe. John, Benita, thank you so much for joining us this afternoon. We wanted to have an oversight hearing particularly on the topic of tax credits. We've had a lot of discussion in our community and amongst ourselves with respect to this particular topic, its concern on how it impacts our revenue situation, whether or not tax credits are being appropriately taxed as a payment in lieu of cash. Just numerous subject areas, and before I get into my line of questioning, I would like to turn over the discussion to Vice Speaker Cruz, who I know has a lot of questions and statements that he would like to begin the conversation with. But we asked both of you to be here because basically your two agencies are the two agencies that deal directly with the issue at hand, whether it's the question of identifying the tax credit recipient, what obligations intended to offset, and then how that tax credit is tracked, recorded, and applied with respect to tax payments that are owed. And so, Mr. Vice Speaker, if you'd be so kind.
Thank you very much. Mr. Chairman, I think my first question actually to them is, when was the decision made to issue the tax credits or allow the tax credits to be issued? In all of the press releases, I still haven't gotten a date. I get some impression it was last August.
Senator, if I may, I have some statements that I'd like to say before we start. And in honor of, first of all, buenos dias and Day, in honor of Chamorro, I would like to say a few words in Chamorro and then say my statement in English. And this will probably answer your first question. So if I may, I'd like to proceed.
Chairman.
Mangaykit pago guidi para uguaha mas kinimprendi por este programa en tax credit. Itaw-tawta dyan komunidad man beneficio no este siha na programa dyan fasilidad. No'y man mahatsa ginin este na programa y tax credit. Este tax credit na programa manasetbi na gobernamento como problema y salapi tat como diferentes na klaseng programa gi man malofan siya. Man mahatsa or man ma-alegra i Paseo Stadium i Guam Raceway Park, Escuela Sia, dyan loke iti Harmon Soccer Stadium no just mas si Senator Pangilinan sa programa mo sige jata na un manada na famagun man beneficio ginin sige ja kada malofan so gwe parewa honi poingi bula tauto muna sa service na fasilidad mampus bula na kwentus man masangan jalan man matsalakod siya gi airi jani television ni gaseta pud este programan i tax credit sinimbat ko un manada na toto man beneficio ni este gi siya jan pud este tax credit para man pay manggaitan no gi la zone landfill man aset biloko este gi sa pudi taza cash lo este manggaitan no utungwa na ganyanya man manai cash lo taza cash po fan manai pos kuha option ma pega gi na este na legislatura na sinya unai tax credit como taza cash pos enige matsogi kuha na manggaitan no man mamaisin kausinya mailihi para manasid enige. Anyway, I want to talk in English now. Thank you very much for this opportunity to discuss how effective your tax credit programs have been. If not for the foresight of the legislature creating these tax credit programs, some of these entitlements, the executive branch would not have had the ways and means to acquire a school, pay down debt, or enter into partnerships for the building of soccer fields in the Guam Raceway Park. So senators, before I say anything else, let me first thank you for authorizing these programs and allowing the administration the flexibility and financial tools to do many good things. I am assuming my role here today is to explain to you how the use of the tax credits you've authorized has impacted our cash flow. Thank you for your concern. I am ready to answer those questions. As I understand today's hearing, we specifically are looking at the tax credit entitlement program established by the legislature to compensate former landowners for the fair market value of lands taken from them. The program was first created by the legislature in 1977 for the purpose of issuing tax credits in lieu of cash when the government of Guam cannot make cash payment for the acquisition of privately owned lands due to unavailability of revenue. Obviously, the legislature had not appropriated the funds through the annual budget process to pay this debt. Therefore, the tax credits became an entitlement to former landowners by the legislature's own design and actions. This is not to say the program is a bad thing. To the contrary, it is a viable solution, the only solution, as a matter of fact, on the table, and one that our cash flow can sustain. The legislature many times in the past has granted deference to the authority of the executive branch to manage cash. Our cash flow management system has worked quite well under the management of Governor Calvo. So while we wonder why this oversight hearing on tax credits never happened when cash management was poor in the 2 decades before Governor Calvo, we do thank the legislature for this forum to celebrate our mutual success using these programs you've mandated. Indeed, the tax program for former landowners isn't the only program granted by the legislature. Our other tax credit programs have also been approved by this legislature. Public Law 24-141 in 1998, 8 million, this is 8 million for Guam Raceway Park program. There were 12 companies that benefited from this. Public Law 26-166 for 1.5 million, it's to rehabilitate and develop and maintenance of Paseo Stadium. Public Law 27-85 in 2004, it's 1 million for the soccer stadium. Public Law 27-114, this is to upgrade and maintenance of public schools facility. And so forth. There have been numerous other public laws that have authorized tax credits. DOA's role in the program is very limited. It mandates the approving officer responsible for payment of land acquisition to complete a certified statement as to the validity of the liability. The program has benefited our island in so many ways. It gives Gulf Guam the ability to invest in its people and community. Without the program, our island's youth will probably not be enjoying the state-of-the-art GFA soccer field in Harmon that exists today. Thank you to Senator Pangilinan for introducing this legislation. You proffered this bill because this was an important investment of our community, and the only way it could happen at that time was through issuance of tax credits. Without the tax credit program, Gulf Guam would not be able to afford to pay for the necessary repairs to Paseo Stadium in Hagåtña, where Little League and Guam Major League Baseball games are played. Again, thank you, Senator Pangilinan, for your support being one of the authors. Same goes on for Saguanhuegu, and the list goes on. This also allows the government to pay down its liabilities, such as the La Jon landfill, which is accruing interest at an escalating amount of about $100,000 per month. Senators, if my role here is to answer your question as to why DOA has approved the issuance of those liabilities, the certificates, let me just save you some time and energy. We did not approve the tax credits. The legislature did. DOA has no choice but to honor tax credits that are claimed under the laws that mandate payment using these tax credits. The law governing the use of tax credits for former landowners of government condemned land states that we shall issue tax credits upon claim in lieu of cash payments. This is not a law we created. This is a law the legislature created. I have also heard your concerns in the media that tax credits are not being issued to families of former landowners whose land was taken for the establishment of roads throughout our island decades ago. I have inquired with the Accounting Division and also Department of Land Management. The reason tax credits cannot be issued to these families under any of the laws you've authorized and entitlements you've mandated is that the liability does not exist in the balance sheets. The claims are not recognized either by the court's order or statute. The executive branch cannot simply create the liability by arbitrary reason. Either the legislature can create the liability through statute, or those with claims can seek relief through Superior Court. If it is your desire to exercise more caution in the issuance of tax credit, then it is up to you to amend the law. You can either revoke the program, or you can change the language so the tax credit no longer are an entitlement. As it stands, the former owners are entitled to these tax credits, thanks to the legislature. Before you amend the law, again, I must state that tax credits have been very helpful and useful for the good of the public. This form of payment, one used by the federal government as well, has been used to build soccer fields, acquire a school, develop the Guam Raceway Park, and pay down bills. One of the tax credit programs also is an option for the $100 million in modernization of public schools. These all are laudable and necessary executive projects to which the legislature has granted ways and means toward achievement. These tax credit programs are a prime example of executive legislative cooperation and mutual respect for the separate and co-equal roles our two branches have. You authorize us ways and means, and we use those ways and means to address priority issues. I understand you are concerned about how the use of the ways and means you have granted us has affected separately our budgetary position and our cash position. I cannot speak to the budgetary position of our government. That is a topic for the budget director. But I can speak with you about our cash position and how these tax credits affect cash flow. This is a fair discussion, and again, I thank you for this opportunity to have this dialogue, and I will answer your questions in this regard.
Thank you. So I go back to my initial question. When did the first landowner come in and file for a tax credit?
August,
and when did...
It was August in 2013.
During the month of August, if memory serves me right, this legislature was in the midst of passing the budget, was there any attempt by the administration to inform the legislature that these tax credits were being issued or approved?
Well, Senator, thank you for that question. If I recall, in August of 2013, Attorney Dooley had sent a letter to the senators informing them of asking for payment on the judgment for the La John landfill. This judgment was entered into by the court in November of 2012. So this body is well aware of that liability, but did not address it in the budget.
Did the governor include a request to pay the $26 million in the 2014 budget?
That would be the budget director to answer.
Well, conveniently, he's not here, and I'm just saying.
Well, Senator, with all due respect, this oversight was called upon for just.
No, I understand that, but I'm just saying you all knew how much was coming in. It was like when we all of a sudden found out there was additional Section 30 money. When Adelup issues press releases every 5 minutes during the public hearing or during our discussions on the floor, surely at some point someone should have said, you should take into account that there may be a shortfall in Healthy Futures funds. Your revenue projection for Healthy Futures funds may not be as great as you think it is, because we now are issuing tax credits for how much was issued in August?
I don't know the numbers, but they were not all requested at one time. Certain owners requested or elected to get the credits. I think at that early point of time, maybe only one of them basically elected to take the credit.
And the section that created this authorization, that is a very good tool, management tool, as you guys put it. Are either one of you aware of the GAR requirements for this program?
When you say GAR requirements, what do you basically imply?
The rules, the government administrative rules and regulations as it relates to this specific tax credit program.
Yeah, we followed that regulation.
You did?
Yes.
And when I sent you a FOIA asking for who had filed, who the landowners were, what was your response to me?
I could not give you the answer because you were asking for a taxpayer. That was the first. But when you came back and asked for numbers, I gave you numbers.
But is there a GAR requirement? No, your response to me was you do not have the names of the landowners or who the landowners are because that's not within the purview of your department. Do you remember that response? I can pull and read it to you verbatim if you want, John.
Basically, our office basically will not allow our department to basically disclose taxpayer information or taxpayer's name. So that's why we said at this point in time we could not send those information to you.
If I made a FOIA request and asked you to redact the name of the taxpayer, would your department be able to provide me with copies of Form DRT 12/21/77-B with the appropriate names and dates in August and subsequent months?
That basically is a tax document. It's like asking me to give you a 1040 or 1040A and redact those things. I think that's we always try not to give out anything that's a tax document. We always say we will give out numbers that represents your concern on any of these things.
Is the confidentiality with GITT, I mean the Guam internal, income tax
I think both, whether it's income tax or local taxes.
And but you have no problem with publishing the names and property numbers for thousands of landowners who owe you property tax, right?
Because that's required by law.
And if we were to change it so that you have the DRT has to give us this list, did each one of the landowners fill in a form?
Yes, they were all followed the regulations, and they were all submitted to our department.
And in all your responses to me, did you bother to tell me that they had complied with the GAR requirements?
If you're talking about the regulation, yes, they basically went through that process with the certificate and specifying the amount and whatever that requirement specifies on that certificate.
And if I was to make a FOIA request and allow you to redact names and signatures, but just the dates so I can see when those things were filed, would you be able to provide that?
Well, I have to basically talk to my legal counsel and our disclosure officer.
Because I'm just trying to figure out whether or not you complied, because your response to me was that Department of Revenue Taxation did not have the names of the landowners because that was within a different department and not yours. Your response to me was not, I'm not allowed to
Yes.
divulge that name. You said that the names of the landowners and their property was not something within your purview, but the GAR requires you to get a listing of the certification of real property acquired for government, and it's supposed to be filled in. And are you aware of that?
What was your question again? We received a letter from the Department of Revenue and Taxation on the amount and the taxpayers' election to take those credits.
And have they filled in all of the required GAR forms for the application and for the designation of the property?
I would have to basically go back and make sure that those documents, but that's the procedure.
Senator,
Are you familiar with Section 15101B?
That's 24. What title are you looking at?
11 GCA.
I don't have that.
In the receipt of these, is there a waiver of confidentiality for these tax credits?
I'm not too familiar with what section you're.
Collection of taxes, but so how much and what months were the amounts applied for?
Well, basically, they started to take the credits in August of 2013 and forward. In other words, thereafter.
How much for each of those months? Not asking for names, just amounts.
I think basically for each month, the first month was $487,668 $554,919. For September is $554,961.66. For October, it's $468,516.65. For November, it's $522,876.80. For December, it's $611,221.76. And for the latest one we have here is for January of 2014 of $671,168.06.
My abacus is broken, but just looking at this does not add up to 13 million.
Well, this is, you're asking me what's taken, what's authorized and what's taken is two different terms.
Okay.
What was authorized is 13.3 million.
And
which
so I
includes the
want to
interest.
know, during the last 7 months, for each month, how much was authorized?
I would have to go back and get that number. I don't have that number for with me right now. I have the number, what was total authorized as of a certain date, which is right now is 13.3, which includes the interest, and what I have taken each month from that 13.3.
The redeemed.
The redeem, yes, what was used or redeemed.
And that's this list that you've given us.
Yes, that's what I.
Where did Adelup get 2.9?
You got to understand that time makes a difference. If somebody were to be asked today, it's 2.9. We get more information. It increases because taxpayers are taking the credits. So that's the difference. Maybe when we do another report, it won't be 3.3. It'll probably be more because we see more credits taken.
And in the testimony you just gave me, the 617, when was that last redemption?
600 and what?
617,000. The last redemption.
Oh, that was for the month of
January 28th, right?
January 14, yes.
But Adelup was saying on March the 7th that the amount was 2.9.
Well,
and the report
again,
that you gave me was that...
you know, it's when we get the information. It's like when we process the returns, you know, we don't get all the information at one time. It's a timing thing. You ask me today, I'll say 3.3. Tomorrow, if I go back to my office and they find more being taken, it'll go up.
I understand.
Okay.
And so my question again is, when Adelup made the statement on the air that it was 2.9 million.
That was the information we had at that point of time.
But when you sent me the subsequent FOIA response, you stated that as of February the 28th, that the amount was 3.3.
Well, because they got more data. In other words, people.
It was from January the 28th. That was a whole month.
But you got to remember that this number has been taken. January's normally due February 20. So not all returns are probably captured at any one point of time. You know that right now it could be more than 3.3 because if they run the reports and they find that these people are taking more credits, then our numbers are going to change. I mean, if we run a report today of 2.9 and we don't run a report until a week after, you're still going to be at 2.9.
Just let's get it clear. The last number that you gave us, 617, and from your testimony, is that was for January the 28th, 2014, correct?
It was for January.
The month of January.
The month of January, yes.
Okay. And you had sent me a FOIA response that said that the amount of 3.3 was as of February 28th.
Mm.
Is that correct?
I believe I did, yes.
And the number that Adelup was saying was the amount, was 2.9, stated it on the year, was March the 7th, was 2.9.
And again, when did we get that 2.9? I have to rely on my staff. If they got that a week ago or 2 weeks ago, the numbers can change.
If my calendar is right, February the 28th is about 7 days before March the 7th.
I know, but the information that we're trying to say changes because if we get new information, it'll change.
Which then brings me to another point. What's the date today?
Today's the 27th.
Have the two of you plus Mr. Rios issued the special fund report yet?
Which one?
The cash balance in the special funds. I guess that's what they call it. The last one that I have is dated February the 28th. What date is it due, Ms. Manglonia?
Another month.
The 21st. If you're being cute about it. Isn't it?
That's what you're saying. So.
You don't know when your reports are due?
No, I have a listing. I have a lot of reports that are due, so I don't memorize every single report that I have. We have a tracking list of the reports that are due.
So you don't know?
I didn't say I didn't know. I said I have a tracking list that I go with the list of the due dates
And
because there's a lot of reporting requirements.
but the February statement is past due. What is the current condition of the Healthy Futures Fund?
It is tracking.
It is tracking?
That's my understanding as of this morning.
Can I get
Maybe there hasn't been any. I mean,
can you go to the first page of that and tell me what date that is that your administration sent that out? On the first page. What's that for? The month of
January 31st.
yes. And go to Healthy Futures Fund.
Okay.
How are we doing in Healthy Futures Fund?
You know, Senator.
How are we doing in Healthy Futures?
It's showing a decrease of from a comparison from 2013 to 2014. You're comparing actual, which is a decrease of 460,000, but this is a reporting at one point in time and a period in time, and there are adjustments that are continuously being made. So this is not necessarily an accurate, this is the statement captured at that point in time before adjustments are made. So this is the reason, I mean, this is the problems with these reports is these are statements that are produced at one point in time before all adjustments are made, are posted.
And does that show that it's tracking?
This one is tracking, but this morning when I spoke with my accounting manager, she was telling me that it is tracking.
And what do you guys consider tracking?
That it's whatever was projected is that's what we're getting.
And so this, between January 31st and the end of February, the report that you're going to now provide us is going to show that we're
If the adjustments are posted,
will be
once the
posted.
adjustments are posted.
And so the report that we're going to get is going to show that
I said
it's
if
even.
the adjustments are posted, but this is my understanding from the accounting manager.
And
that-
what's the cash situation in that account? On the papers that you have? Not necessarily
This is-
what I have, but,
This is showing the revenue,
right.
not necessarily the cash. This is the revenue that's.
Yeah, and
that's
do
going
you
into
have
the account.
the most recent cash statement?
I don't have, I mean, Senator, I'm here to respond to, I'm sorry, but I didn't prepare all these documents that you're asking right now because my understanding is we're here to discuss and clarify tax credits. If had I known that you wanted to request for these information, I would have been more prepared to provide you.
And of the 3.3 that you guys are willing to admit has been redeemed, what tax, specific tax, has it been redeemed against?
Okay, that would be, John might
Okay.
have that information, but even if it was redeemed for tobacco tax, for instance, that impacts the Healthy Futures Fund, it impacts it it's a cash situation, but the revenue is still accounted for and the revenue is still realized for the Healthy Futures Fund. So we always ensure that the Healthy Futures Fund is made whole. Those programs that you're probably referring to, which are the cancer funds, it gets its funding. So if you're concerned with that, I know that we have transmitted the funding for the Healthy Futures Fund. I mean, for the cancer fund.
John, how much was debited against the Healthy Futures Fund in your 3.3 calculation?
2.8.
2.8 of the 3.3?
It shows here, yes, from our 3.3. Under, you're talking about tobacco tax?
Yes, tobacco and alcohol.
Yes. Oh, and alcohol. I would say probably 2.3 to 2.4.
So it's 1.9 plus about 500,000 from tobacco, correct?
Say it again?
The redemption of tax credits against tobacco was about 1.9, is that correct? 1.8?
The report shows here 2.2, and the alcohol is 118,000.
Okay.
So,
2.2, so it's a
yeah,
2.3.
2.3, 2.4. Yeah.
And as Director of Administration, you're assuring me that all of the programs within the Healthy Futures Fund will be fully funded as we had anticipated.
That's my understanding.
Mr. Chairman, I'll have a question and I'll come back.
Thank you, Mr. Chairman, Mr. Vice Speaker. I do have a number of questions. Trying to figure out exactly where to start here. On the issue of tax credits, the recipients of tax credits, I noticed something that was kind of disturbing to me when I was researching it, and that is that one of the recipients of tax credits is currently a qualifying certificate holder. Are you guys aware of that? John, you should be aware of that.
I'm not too sure. I have to
Namely, Cortec. Cortec, which recently signed a lease purchase agreement with the government of Guam, is also a qualifying certificate holder. You should be familiar with that because you're having to offset qualifying certificates to tax revenue.
basically you're saying it. What I know on taxes I cannot disclose. So basically,
Is Cortec a qualifying certificate holder?
well, in sense, if there's a qualifying certificate, I guess if they are.
Now, I'm just trying to figure out why would a qualifying certificate holder who has tax exemptions want a tax credit when they already have tax exemptions? And see what happens, and the reason why it's so troubling to me is if if they already have tax exemptions and we're giving them tax credits, that means that it's pretty much assured that those tax credits are going to be sold. And those tax credits are going to be used to offset taxes from other companies that would have actually had to pay them.
Well, Senator, actually, if if you're mentioning Cortec, I mean, I'm sure that they would have rather received cash than the certificates, the tax credits, because cash you get 100%. But if they sell the tax credits, they're selling it at a discount.
Yeah, but and that's what I'm trying to.
That's what I've heard.
But
I have heard that.
From who?
I don't have to say from who, but I have heard that statement made.
Yeah, so when it comes to and so that's what I'm trying to really get a handle on this, because when you go and you get a qualifying certificate, right? You have to meet certain standards. You have to employ X amount of people. We set up certain parameters for us to be able to grant that tax exemption. But when we give tax credits to a company that has a qualifying certificate, they're basically able to give a tax exemption to other companies without having those very same parameters set that we typically would set in a qualifying certificate. And so not only now do we have one company that has all these tax exemptions because of the qualifying certificate, but we now have a whole bunch of unknown companies out there that will be having tax exemptions without the same kind of parameters that we would establish of a qualifying certificate. And I'm trying to understand, if they do have a qualifying certificate, which I know they do, why would they want to be compensated in tax credits unless they're going to then turn around and sell those tax credits? And the question you posed, Benito, was, of course they would rather take cash. But you just made it very clear earlier in your testimony that problema y salapi.
That's correct, and that's why we're issuing tax credit.
No, but see, the reason why they won't take cash is because we don't have any cash to offer.
That's right.
And so they're taking the tax credits and they're turning around and selling those tax credits. But one of the reasons why we don't have any cash is because we have all these tax credits that are offsetting the cash that we would have had.
Well, if that is such a problem, we know this body has proffered a lot of projects through tax credits because there's no cash.
I understand, but so
when you, Senator, when you look at the redemption of the tax credit for the last few years, you would need to be a business that make billions of dollars to be able to redeem all those tax credits. But looking at what has been redeemed the last 3 years, it's been 20 million has been redeemed. And we have been able to manage those, despite those redemption of tax credits, we have been able to manage the cash. So I would see that this is a really good program that this legislature has proffered, and there's thousands and thousands of people out there, the whole community are benefiting from this. I mean, look at the soccer field, look at the Paseo Stadium, the schools are being built, we're going to have a new school.
And all of those projects had bills that went through the legislature that were approved by the people of Guam to issue the tax credit.
It's whatever this legislature approved and by means of issuing tax credit, those laws, the executive branch have followed.
Yeah, so all of those projects that you're talking about, the thousands of people for the soccer field, the schools, those all were individual public laws that were voted on and approved. They had public hearings, and they became law, and that's why those tax credits were issued. But the question of this compensation for the Ladzon landfill, did we ever have a public law that authorized the issuance of those tax credits?
I'm glad you brought that up. Public Law 14-69, 1977, it was approved. There was a court judgment in November 2012.
So we're using a 1977 law to issue out the tax credits
as long
for
as
the
the law is
landfill.
valid. I mean, if
It hasn't been repealed.
It has not been repealed. There was an audit done by OPA in November 2007, and there was a notice given to the legislature recommending the repeal of that piece of legislation, but nothing had been done. So I am taking the position that this legislature thinks that that is a good law and it should remain in the books, and it has not been removed, so it's still there. And it is the election of the landowners to come forth to elect, to receive tax credit in lieu of cash. It's an option for them, and they have taken that option. And if once they exercise that option, we don't have a choice. The law states we shall issue the tax credit.
And we've issued already 13.3 million has been authorized.
It has
That's
been.
correct.
That's correct.
So the debt, which was what, 30 million, that should now be down to about about 17 million now. We're not accruing interest on the other 13.3.
I'm not sure on the.
No,
accrual
that's how it
interest.
should have been, because if we authorized it to pay down the debt, then the debt should have been reduced by 13.3 million. We shouldn't be accruing interest on that 13.3
It's been
anymore.
reduced by
It's been
3.3.
Then why do we authorize 13.3?
When they come in and basically they present their certificate, they say, the government owes me this much money. Obviously, they can't take all the credits at one time. So every month, these people are afforded to offset their taxes against their credits that they're allowed to under Public Law 1469. So the running balance, if you want to look at what was authorized, basically is 13.3 minus 3.3. We're looking at maybe 10 million, 9.9 million.
No, why do we authorize 13.3?
Because
It's
the law.
allowed.
I'm sorry?
You allowed it.
No. Why is 13.3 the figure? It's 30 million. Why didn't we authorize 30
No,
million?
because
it's
those are the
each
elections.
person, each taxpayer has the option to come forth and apply.
So if they've already claimed that they're going to use 13.3 million for tax credit, shouldn't the debt be reduced by 13.3 and not accruing any more interest? Why is it that they've already locked in their payment, but they're also still going to be accruing interest on those payments?
Actually, Senator, that is a question that I intend to pose to the AG's office
Okay,
to
very
clarify, because I did ask that question, whether the interest stops accruing once you issue the tax credit.
Absolutely, it really should.
But it's not clear. It's a legal question, and but you know, if I were those those landowners, I'd hang on and hold off on redeeming the credits or claiming for payment, because I am accruing interest, because the court gave them 6% interest to accrue from January 2008, and you can't go to the bank today and get 6% interest. You'll be lucky you get 2.
No, I agree, and that's why, for me,
And
it's
that's
so
why,
important for us
we
to
need to
figure out.
identify funding to pay these people off.
You know what I think would have been really good for the people of Guam is if we all came to the table and talked together. One of the things I was working on in my office prior to even finding out about this, because I had no idea about it, was trying to figure out how to pay that off through a combination of maybe property swaps, tax credits, payment commitments. But we never sat down and talked about it. All of a sudden we just kind of found out that 13.3 million in tax credits has been committed to paying off this obligation, without really sitting down and assessing whether or not. Hang on, Benita, let me finish, please. Without really sitting down and assessing whether or not there were other options on the table for us to pay off that obligation. And so now this 13.3 million is affecting things like the tobacco tax, which is affecting things like the Healthy Futures Fund. And I know that you're stating that the governor is going to transfer money into that fund to make good on those obligations.
No. That's
but
I didn't say that the governor is going to transfer money into that fund. I'm saying that revenue is recognized as revenue for Healthy Futures Fund. It's a difference. It's the distinction between revenue and cash. This is a cash issue. The revenue did come in for the Healthy Futures Fund. So what we do is we ensure that the cash is available for that funding.
And the credit was claimed against the cash that's supposed to be going into that fund.
Can you repeat that again?
The credit was
I just want to make
claimed-
sure that you understand
Yeah,
what
no, I
what
very
I'm
much
saying.
understand.
Yeah, no,
I
but
want to make sure that
I want to make sure that you understood.
the credit was claimed against the cash that was supposed to go into that Healthy
No,
Futures
the
Fund.
credit was not claimed against the cash. This is just a revenue. The credit was claimed to pay their tax.
Now, what would you have paid your tax with?
Tax credit.
No, but in lieu, if you use the tax credit to pay that, but
That's
what would
correct.
you have used if you didn't have a tax credit?
You use cash.
Cash.
Yeah.
And so the tax credit was used to offset the
Yeah,
cash
but when
that
the
would have
tax
gone
credit,
into that fund.
regardless of whether they use cash or tax credit, the revenue is still recognized.
It's
That's my
recognized, but
point.
you cannot pay for programs. The government of Guam can't use tax credits
But
to
what
pay
I'm
for
trying to
programs from the
say,
Healthy
what I'm
Futures
trying
Fund.
to say is we still use the general fund cash to pay for those funds, especially the cancer fund.
And so where does the offset come from? If we're taking cash from the general fund to cover the 2.2 million, then where is that 2.2 million coming from? If it's cash has to come from somewhere.
That's a cash management tool that we do.
So where's
we
it
have
coming
to-
from? Because I understood that we appropriated everything that we had coming in. Are we tracking anything in excess of what we've appropriated?
That's what I'm trying to say again, that I think you're mistaking the cash and the credit that comes in. They're both recognized as revenue. So regardless whether the cash did not come in, the revenue is still recognized. So this is basically, it's a cash management that we do. And I believe we have been successful in doing it in the last 3 years, despite $20 million of tax credit redemption.
But see, that's just, and that's where I just get so confused. I mean, I see what you're saying about revenue and cash, but how can you say that we had 20 million in tax credit redemptions, which is 20 million in cash that's supposed to come into the government? How can we say that we had 20 million more come in, credited out, and we were able to make good on everything else? I mean, something is not getting
I
cash.
can't say that we're
Otherwise,
making
we had,
good. No, but
Go ahead.
Senator, I can't say that we're making good in everything else. We are about 60 to 90 days on payables. That's why you always have that delay. But it does impact the cash, but we have been able to manage. That's what I'm trying to say. We have been able to manage. We've been paying tax refunds. We're paying vendors timelier than this government has ever seen. And like I said, the last 3 years, over 20 million of tax credits have been redeemed. But we are still making payroll. We're ensuring that the allotment to the judiciary is received timely. We had trouble in the first year of this administration. I would get a call from Vince, say, "Are you going to release our allotment because we need to give the senators their money?" I said, "Sure, maybe by next week I'll give it to you."
No, for me, my perspective, I do believe we are doing better. And I think that the whole reason why we're having this oversight hearing is we want to make sure that we just keep getting better. You know, one of the things that I just found
Thank you, Senator,
absolutely,
for
no,
recognizing
I
that.
do, I absolutely do. You know, first of all, our job is to just constantly improve. And one of the things I was going to share was, you know, our people years ago, you know, tax refunds took forever for them to get it.
Yeah.
Now they're getting it to the point where, you know, even if it's a month already, they want it. You know, I mean, the expectation is rising with
They
the
want
standard.
it within 1 week of filing.
Yes, and our people's expectation is rising with the standard, and that's a good thing. And what we need to do now is constantly try to live up to that standard.
Yes.
And so part of us trying to meet that obligation and live up to that standard is making sure that, you know, all of these areas are as airtight as possible. Because this 500,000 in tax credits that we've been issuing since August, those are all additional refunds that we could have paid. You know,
Senator,
that,
please, may I just make a correction on that? I mean,
Okay.
you're saying that we issued 400 million in tax credits?
No, 400,000 in August, 487,000 in August was credited out. 554,000 in September was credited out. 468,000
Yeah,
in
but
October. These are all
Senator-
tax credits that
no,
were
but-
claimed.
yeah,
Senator,
but Senator,
Senator, you got-
We are paying tax refunds.
No, yes, you are. I'm not saying that you're not. But what I am saying is that this cash
but
could have been
think of it-
cash for tax refunds.
But look
Think
at
of
all
we
the
have-
benefits of
wait,
all these
no,
projects
but-
that have
I understand,
been-
but I understand. All I'm saying is we need to be
Yeah.
we need to make sure that we're looking at cash as it relates to every obligation that we have. You know, the Luzon landfill is one of them, and the reason why we're saying we're going to take tax credits and not bring in that tax revenue and not pay out the tax refund is because that Luzon landfill is accruing this interest at 6-7%. Now, if we're going to issue and authorize 13.3 million to pay that down, then fine, I'm okay, you know.
Yeah, but-
the
but
trade-off
Senator-
is maybe we're not going to pay out refunds as fast
But-
because hang on, please.
Yeah.
Maybe we're not going to pay out refunds as fast because we're going to make sure that we're not accruing that interest rate. But if that interest rate is still being accrued, then maybe that cash should have gone out as refunds first. And so, you know, this is, as policymakers and as public servants, both appointed and elected, these are the kind of discussions that we're just going to need to have in the public arena so that everybody can understand what we're trying to accomplish and why there's these shared concerns here. So, I think that all of us want what's best for our people. We don't want to be paying a 7% interest rate. We also don't want people to be waiting any longer than they have to. And what we need to do is make sure that we're asking the necessary questions so that we understand up here, our people understand, and our priorities are all on the same page. But I did have another question, and that is with respect to the taxing of tax credits. Now, tax credits are payments in lieu of cash, right? Which means that if we did not give them the tax credit, they would have received cash. Now, if we paid somebody in cash, that would have been a taxable event. They would have had to pay taxes on that. So are we taxing tax credits when they're used to compensate in lieu of cash?
Well, you have to look at the transaction. What they're giving up is land. So when they recognize what they receive in place of land, they got to look at what their basis is and how much they're getting. So if there's any gain, then they're responsible to pay on those gains. So just like any person who disposes property, it's almost the same thing. You dispose property, and then whether you get if you get an increase or a gain, then those are subject to, unless there's a law that authorizes that they're not subject to tax.
So when we're compensating a landowner for their land in tax credits, they're having to claim that compensation, if it's above a certain exempt amount, as a capital gain.
It's something in lieu of cash. So it's just like receiving cash. Receiving cash, but this time you're not receiving it. You're receiving it for other benefits. So whatever that amount is you actually compare to how much you bought that property, how you acquired that property. And it's just like selling a house.
Yes, of course. So if the property, if you bought it at $20,000 and you got tax credits for $40,000, you got to pay taxes on the $20,000 gain.
That's correct.
That's
Okay.
right.
And we're making sure that we're going to be assessing that.
This is basically.
That's not going to be an assessment. I mean, the taxpayer, that's their
responsibility
to report it on their, whether it's a 1040 if they're individual, or whether it's an 1120 S for S corporation, 1120 or 1065 if it's a
No, I
partnership.
understand. It's their job to report it.
Then
Yes.
to report it, and then whether their basis exceeds the cash, what compensation they receive, then they're going to pay tax on it. But if it doesn't, then there's zero tax.
No, I understand.
Yeah.
But I just want to make sure that we're paying special attention to this because it's such a unique income stream. We typically.
But you're targeting taxpayers, though. I don't know if I'm sure that DRT has their system of auditing taxpayers.
Sure.
You're not going to go now and start targeting taxpayers, just like what the IRS
It's
did,
basically
right?
voluntary compliance. In other words, a taxpayer who has his obligations when he files his return. It says under penalties and perjury that he reported all his income and all his expenses according to law.
But we are. I remember Vice Speaker Cruz asked about a waiver that was necessary to be signed, correct? And I do know that, for example, of qualifying certificates, we do track those because of the special nature of the QC and the need for us to keep track. We're not targeting the taxpayer; it's the nature of the transaction. So, do we need to enact some kind of law to make sure that we track that particularly? Because, for us to be issuing out these tax credits and not tracking them and not making sure they're getting taxed properly. One of the concerns I had, going back to that question with regards to the tax credit recipient also having a qualifying certificate, is let's say I have a qualifying certificate, right, and you compensate me with a tax credit. I take that tax credit and I sell it at a discount to taxpayer X. I sell it for 80 cents on the dollar. That 80 cents that I sold it for isn't going to get taxed necessarily because of my qualifying certificate, but now that new taxpayer has a $1 of credit that they bought for 80 cents. If they redeem that $1 of credit, they receive a 25% capital gain, 20 cents of 80 cents. You guys follow? Okay. So are we making sure that they're reporting the taxable gain on that instrument? Because it's like they're realizing a capital gain on the tax credit that they're claiming, that they bought it at discount.
Again, it all depends on why are they receiving these benefits. If for example, I'm receiving a benefit because I'm leasing my land, or house or building, then I'm really receiving rental income. You know, so in place of getting cash, I'm leasing my property. So you know, the fair market value that agreed property is what I report. And if it's rental income, it should be reported on the rental income on every 20th of the month. That's the responsibility as a taxpayer. Whether they get a gain or not, that will be adjusted. In other words.
Yeah. So you know, because of these tax credits and the high likelihood. I mean, for me, I'm very worried about us having these uniquely taxable events that were not I mean, if the mentality is that to track it in particular would be to target, I'm kind of concerned about that, because now I'm not too confident that these tax credits are being taxed. I mean,
and again, you know, it's voluntary compliance. You know, if we find that any particular taxpayer, doesn't have to be this taxpayer, any taxpayer out there that we know is not compliant with the law, we will, you know, look into it.
And so let me kind of put it into perspective. Like, for example, there's 13.3 million. Let's just say it's 13 million, right? If we pay that in cash, you know, and we recovered the taxes on that cash, let's say it's 20%, that would have been $2.6 million that we'll recover in taxes. But if we give a $13 million tax credit, and that tax credit is utilized for whatever purpose and not taxed properly, we're not recovering anything from that. And so the true cost of issuing a tax credit goes beyond just the savings and the interest rate that we're using to pay off the obligation. It also speaks volumes to foregone tax revenue that we're not going to be bringing in if we had taxed those tax credits properly. So that's why I'm I'm really alarmed about the tax credit as a financial tool, because if we're not tracking it properly and taxing it accordingly, you know, what is the true cost of the financial
well,
instrument?
I think that the main issue here is the program on tax credit. What is the benefit that this community have received? And judging from the history of the redemption of tax credit, it has been manageable. It looks like it's working. And I mean, of course, if you're going to redeem 200 million of tax credit in 1 year, then it's going to impact the programs. But so far, it has been, you know, the amount that has been redeemed has been manageable. And since this government doesn't have the cash to pay for those programs, this is what this legislature has continued to approve and support.
Do any of my colleagues have any other questions on the tax credit issue? Speaker Pangilinan. Speaker Pangilinan.
Thank you very much. First of all, I just want to make a distinction between the tax credit program that was authorized by a bill I introduced versus what Ms. Manglonia is giving me credit for. Number one, the tax credit for the Soccer Association is a matching tax credit. It's for an investment in the facilities itself. It's not to pay for government operations, nor is it to reduce government debt. It is for an investment in facilities to benefit the community.
Yeah, thank you.
So, and it is required to be matching. So for every dollar in tax credit redeemed by the Soccer Association to build the facility that they've built, they had to invest $1 of their own money. So it's not 100% tax credit, it's a 50% tax credit, which resulted in an investment of an additional 1.5 million of outside money that would not have been invested had that tax credit not been there. That's the biggest difference.
Yeah, and
the second biggest difference, would you just let me, the second biggest difference is there are rules and regulations for how to claim those tax credits. And those are tracked by the Department of Revenue and Taxation and the Guam Economic Development Authority. And all of those are transparent and reports are to be filed. The tax credit that we're talking about here is supposed to be governed by the GAR that is here. Secondly, they're capped. So we know that we are going to allow up to 1.5 million of tax credit for the soccer facilities. Nothing more than that. So we know what the effect of that tax credit is going to be on the operation of the government of Guam. So we account for that in, of course, the budget process in allocating the revenues we receive for the operations of the government of Guam. That's one of the biggest difference between this and the other tax credit program. And I'm not saying it's like an administrative tax credit program. I'm just saying what is in place now, which is being implemented after 40 years of never being implemented in the past. So we don't know. At least we know that it's 13.3 and we've capped it. So I'm assuming that when you authorize 13.3, that you think that you can take 13.3 in collections for this fiscal year, take that out of the collections, reduce the budget amount by 13.3 if revenues come into as projected. If there are surpluses, then you would take it from the surplus. If there is a deficit, then you are actually short an additional 13.3 for the operations of the government of Guam. So I'm assuming that, or maybe I shouldn't assume, that you did your calculation and said, we're going to authorize 13.3, and that's what we can afford to be claimed against of not collecting $13.3 million in revenue, because we're going to allow them to offset that cash payment that would have come in up to 13.3 in lieu of us making a payment back to them of 13.3. So that really is the biggest difference. I want to, again, just say that we are investing in facilities in the tax credit programs that I had worked on, and not in government operations, and that's the difference. The issue, John, of confidentiality. In a letter you sent to me, you cited the Guam Income Tax Territorial Code as what is covered by confidentiality agreements that does not allow you to release the information. Where in the statute does it say that the tax credits for taxes other than the Guam Territorial Income Tax is confidential information?
I believe there's a particular section in the local statute that talks about that.
Where is that?
I got to go back.
Well, why won't you cite that to me and just cite me just the federal income tax code regulation that says it's confidential? If you believe that there is local statute that makes alcohol taxes confidential, tobacco taxes confidential, business privilege tax confidential, why wouldn't you tell me where in the code that is? And just cite the IRS code.
Basically, to consultation with the disclosure officer and the legal counsel, that's that section that we wanted to put.
I know, but it only covers the IRS code. It doesn't cover the local tax code.
But there is a section in the local statute that talks about.
Can you then reissue your response?
I gotta look. There is still a provision there that does not allow us to disclose taxpayer information.
And I'm asking you to, on the territorial income tax, can you send me one that says alcohol taxes, tobacco taxes are confidential information and are governed by confidentiality agreements?
Any tax documents?
Yes, I know. I've had CPAs read yours. I've had CPAs read your attorneys and CPAs read what you had sent to me, and I'm getting a different reading. So can you send me exactly where you can link the Guam territorial income tax and the provision for confidentiality for income taxes to the tobacco, alcohol, and other local taxes enacted?
I'll look into it and I'll get back to you.
Okay. The other thing, John, is it appears that the applicants who made and elected to take these tax credits are selling them. So I've heard Ms. Manlonia say she's heard. Where in the GAR does it allow the applicant and the taxpayer that is owed the tax credit to sell it to another, to have somebody else claim that tax credit on his behalf? The GAR doesn't, I can't find it. It's a 2-page GAR. And it doesn't say here that the claimant can sell his tax credit to somebody else and that other person can claim it against his taxes due.
I don't see it either in the GAR, but
That's what's happening, you're telling me.
It's not restrictive. It didn't say either that they can't sell it or transfer it. It didn't say that either.
Really, so, and so how did you come to the conclusion of going one way versus the other?
It's because it's silent. In other words, it's not restrictive. In other
But
words,
it's not permissive either. And so where is the opinion that advised you to go the other way? Was it based on statutory construction? Was it based on a legal opinion that says this is silent on, because the other tax credits issue and programs kind of speak to that, how you can transfer them and so forth. But this tax credit doesn't say that at all. And so if we have kind of a policy that says we're going to treat tax credits like this, and when we want them to be transferable, the law says they are. So wouldn't it be safe to assume that when we don't, we just don't say they are, and when we do, we say they are?
well, the obligation of making that election, we have given that to the taxpayer.
No.
John.
The GAR only allows him to elect to register.
Let me just say something.
But let me say my point first, and then you can. The law only says they can elect to receive the tax credits for their liability owed by the government to them. It doesn't.
And that's what we did. We gave them the credit.
Right, but are you given the credit? Is it being redeemed by him? Is it?
In other words, we gave them the credit. Mm-hmm. And your question now, whether it's transferable or not, that's it's silent. It didn't say that they could or they couldn't. So what makes that tax credit from that taxpayer redeemable by that other taxpayer? Where in the law does it say that this tax credit, now that doesn't belong to the claimant? Let me ask you, where in the law that says they can't do it?
I'm saying it doesn't say you can.
But it didn't say you can't.
That's why I'm asking you, where is the legal opinion?
But it didn't say also that you can't.
Right, and that's why I'm saying, where in can you give me a legal opinion that says you can't? Can you give me a ruling, maybe a revenue ruling? Can you give me a revenue ruling or a tax ruling on the GAR that says, I hereby say that these tax credits can be claimed and redeemed by those other than the claimants? Were you asked about that?
Senator, why don't you
introduce
a bill?
No, I'm asking John. Because the decision, because what he has already done, I'm asking him, what's the basis of that? And you're right, there may be a bill. There may be a bill.
Want to restrict because
all I'm asking,
I'm
asking John.
It's a silent. It didn't say that whether it can be transferable or not, and the owners want to redeem their credits by transferring.
Right.
So
and I'm saying, John, how do you treat then guy number 3? The third owner of that tax credit. How do you treat him? And where's the basis for that? There must be some kind of discussion that occurred between you, unless there was no discussion and you just said.
We did discuss it among and we at that point we looked at it and says it was silent, and at this point in time the owners of this property who elected to take it are doing the transferring, and we were allowing it. Yeah. I mean, if there's a law that tells me the director that you can't do it, then maybe I should go back and let these people know.
Well, or there is an advice from your legal counsel that says, John, you can't do that. Did you discuss it with legal counsel?
We discussed it among ourselves.
Legal counsel included?
I don't know if those guys discussed it with the legal counsel, but I discussed it with my management team.
Right.
And at that point in time, we decided that it's silent, and if the taxpayer wishes to transfer those credits to other taxpayers, then we will allow it.
Well, can you then go back and ask your legal counsel, because you have other requests?
Sure.
So I'm making that request here.
Sure.
I'll be happy to put it in a letter
Sure.
if you would like me to do it. But what is it? How did you how do you support allowing the third owner of that? Because it's only supposed to reduce to be a credit towards what was needed to be paid to the original claimant, right? And so how can this claimant now, use it for his other obligations? And why the reading of the law and the silence of it allows you to do it?
I'll look into that.
No. Will you ask your legal counsel to issue you an opinion on
Sure.
that? Okay, that's it.
Yeah.
That's what I'm requesting. Now, again, we kind of say we're only paying. We issued a tax credit which we don't have the cash. When does a tax credit turn into cash? When does cash account for the tax credit that's redeemed?
When they actually claim it on their return.
Okay, so when they claim it in the return, it becomes cash that should have been received but is not received.
But it's recorded as...
But it's recorded as revenue.
Yes.
Yes. No, I understand revenue and cash.
Okay.
So, right? But so it does become cash. At some point, it's accounted for in the cash flow. Correct? And in this case, it would be accounted for in this fiscal year's cash flow. Correct? All these redemptions. Whether it's charged against the cash flow of the alcohol or the cash flow of the general fund, it becomes charged against the cash.
It's not cash, so it's not in the cash flow. I mean, it's recorded as revenue.
It is recorded as revenue.
But it's not cash.
Right.
It's not considered as cash.
I understand,
Yeah.
but it has to be accounted for in the cash, because you would not receive that cash to fund what was appropriated from that revenue. In other words, if we appropriate $30 million, because that's what we say we're going to receive in taxes, and we issue $15 million in, and we appropriate that $30 million, when you collect $30 million, you give that cash to Department of Education, because that's what it was appropriated for. When you have somebody claims $15 million of credit, it doesn't become cash. It's recorded as revenue, but the cash that you record, and the cash that you collect, if you mean your projection of 30, is only going to be 15, because that 15, which would have been cash, is not paid in. So now you only pay Department of Education $15 million in cash, and you're shorting them by $15 million. So it does turn into cash, and at some point, as you mentioned, cash management has to kick in to ensure either you collect more revenue or you reduce the operation of DOE by 15 because you don't have the cash to support that operation.
Yeah, but we have not reduced the operation.
No, I understand.
Of DOE, Senator, if that's what you're inferring.
No, it's just an example.
It's my responsibility to ensure that,
Exactly.
that what has been allotted to DOE is remitted to DOE.
That's correct.
And that's what I have done for the last 3 years.
Yes.
I have not given...
Except for last year, but yes.
No, that is wrong, Senator.
No.
Because last year...
Except for last year, because
No.
the same thing happened in the health happened in the health insurance fund.
No, that's
the
not true.
reimbursement for the health insurance fund.
That is not
You did
true.
not collect that cash,
No.
yet you paid the obligation that was appropriated.
You're mixing a lot of things.
No,
Senator.
you're mixing it up.
No, you are.
I am telling you exactly what.
No, you are mixing a lot
so
of things, Senator.
I'm just saying that
you always like
that's
to throw in
that's
health
what
insurance in
happens.
the picture, and
That's
that's not the point
exactly
here.
what happened with the
No,
self-insurance
Senator,
fund.
it's not.
You did not collect the $2.7 million.
We have been able to manage the cash.
You covered it. You covered it.
Despite $20 million of
You
tax
covered
credit redemption the last 3 years.
You covered that shortfall.
We have paid DOE. We have not shorted DOE. We have given them all the allotments that they have
And I'm saying that DOE still says that they did not receive $9 million in cash last
That
year.
was because the revenue did not come in for that fund.
And when the revenue did not come in for the self-insurance fund, did you short payments from those? No, you did not. You paid it.
No.
It's the same thing.
That is not right.
It's the same thing.
No, it's
So,
not, Senator.
thank you very much, Mr. Chair.
Thank you, Speaker Pangilinan. Any other senators have questions? Senator Morrison.
Thank you, Mr. Chair. Thank you, Benita. John, I know we brought up earlier the interest rate amount. Is that around 6%, 7% on the tax credits? It's 6%. 6%?
6%.
So how much does the government of Guam have been paying on the total amount owed? How much have we been paying in interest?
It's about 100 billion. I mean, 100. It's been about 100,000. It's accruing about 100,000 a month. So the tax credits that happen. You're referring to the La John landfill, right?
Yes.
Yeah. So those that have received the tax credits and have redeemed those amounts, the interest is not accruing anymore on those portions that have been redeemed.
But to this date or whatever date, how much have we already paid in interest on the total amount owed?
It would be the tax that have been redeemed.
Yes, I know we basically, I guess the principal that on the 13.3, I believe the principal, I think is about 5.9 of 6, and I think the difference is about 3 million of interest that have accrued to that certain time when they started taking those credits. So the ratio, I don't know how much was taken on I have to go back, Senator, and look at how much of those interests were taken during those months from August to January.
The reason why I bring this question up, because I think we're missing something very key into why we're really, in a sense, there's other elements, but there's something very key to why we have to pay this off. There's interest accruing, and I just want to know, do you have an estimate that how much the government will be saving if we use this tool of tax credits to pay them all off?
Well, you can take look at the judgment for the landowners. There's 21 million is the judgment because there were 3 million that was deposited.
What would be the impact?
But prior to that, the interest that has been accruing since 2000, the judgment says that you have to pay interest from 2008, and the judgment was rendered in November 2012, and. Attorney Dooley wrote to the legislature in August to request if they could be paid, but there was no appropriation to pay these, and so interest has accrued from 2008 to 2013 at about $1.3 million a year. So 1.3 for the last 5.5 years is about over $7 million that has accrued already. So it's already over 30 million, if you will, and because of the interest that has accrued already. And so how you calculate it is you take the tax that has redeemed and reduce it by that amount. But remember that as long as the principal has not been fully utilized, then you still have to pay interest to that taxpayer. And then we're still accruing interest for those landowners that did not come forth and elect to get tax credits. So you still have more than 50% owners that have not come forth. So we still have to find ways to pay that landowner.
That's very good information to have for the record, because I think we're talking about a lot more money than 13.3 million.
Yes.
So if you did not have this tax credit option, what other option would you look at to not only addressing this 3.2, but the interest that is bearing on the total amount?
Yeah, the option would be the legislature to find funding, because that's you hold the purse strings.
Okay. Okay, thank you, Mr. Chair.
Thank you, Senator Morrison. Senator Yamashita?
I simply just want to say to each of you that I appreciate your ability to focus on the issues and your ability to respond the way you have. I think we've certainly developed and we've gotten so much better at that. And I agree with Senator Nicolas that things have gotten much better. And so for you to come in and try to keep focused, right, and remain strong is certainly appreciated. It's no easy task.
Thank you. It's not easy coming here.
I know
and
it's
being
not.
bullied here.
I know it's not. It's no easy task, and that's certainly acknowledged. So thank you very much.
Thank you.
Senator.
Thank you, Senator Yamashita. Vice Speaker Cruz.
Benita, did I hear you say over the last 3 years there's been $20 million in tax credits?
No, I didn't say that. I'm sorry. Maybe you didn't hear me.
No, in the last 3 years. We can play the tape back
No.
if you
The
want.
tax credits that have been redeemed. This is for all programs. For all programs.
But 20 million?
For the last 3 years. Yeah, 20 million from 2011.
Can you provide us with a breakdown of how much per year and what the tax credit authorization was for each one of those?
Yeah, I would refer to John on that.
But, Mr. Chairman, if
yeah,
you could
but
direct them.
I will work with John.
The other thing that I was wondering, you mean to tell me, one other thing. The judgment that was issued by the court,
Yes,
it said 21 million total.
yes.
Did it break down individually the amount owed to each one of the landowners?
There was a percentage, I believe. Yes. Hang on. Let me look at the judgment because I have the judgment here.
I haven't seen the judgment, so that's why I'm asking.
Yeah, it did break down. Basically broke down the ownership of the landowners and what because there was a deposit of about $3.41 million. So they broke down the distribution of that.
By percentage, but not by specific amounts, not that 1%. And specific amounts?
The 3.4 million.
The 3.4, but the remaining 21.
Available there.
So how did we know landowner C comes in? How would we know how much of a tax credit you were going to direct John to provide them for the land?
So it would be the balance, the remaining balance of the 21 million is prorated by percent ownership of the property, the interest.
The owner would declare that amount, that this is what they're owed, and I think that's something also when they come forward, right?
Yes, we go with the judgment.
But you would take it from them as the amount, the percentage, what that percentage actually means of the 21 million.
Yes, prorate the 21 million with the percent ownership that they have that is shown in the judgment.
Okay, so who does that calculation, John or you?
It's here. It's showing here.
No, I understand. Somebody has 5% interest. It's
Yeah.
5% of the 21
we
million
do our
or
own
5%?
calculation. They do their own calculation to ensure that our calculations are the same.
Okay. And you said that the interest continues to accrue as long as they don't redeem the tax?
That is the question that I said that I want to pose to the AG's office because that is what I'm not clear on whether because I posed that question to John, but it's not clear. So that's what we'd like to pose to the AG's office whether the issuance of the tax credit is considered cash payment or whether the cash payment is considered issued. I mean, done when they redeem. So that's what I want to pose to the AG's office too.
You had no agreement with these individual taxpayers at the time that you released it and saying this is in full satisfaction with no further interest to be accrued?
There's existing form that was provided back since 1977, so that was what was used to give to the taxpayers. So.
But there was no specific understanding between yourself and the taxpayer that if I give you this 10 million in tax credits, you'll no longer be able to continue to accrue interest on the 10 million.
I don't think so, but I think it's John that could actually answer that because he's the one that issues the tax credit, not DOA.
John,
but I'm just trying to assist.
Is there an agreement with the taxpayer that the interest stops, or?
I don't think there's the public law 1469 does allow the interest as part of that credit to be used.
It's specific. In other words, the owner can take tax, interest, and I believe even penalty, if I recall reading it. So that's something that when they came, they addressed what the principal, what the interest is, and what the total amount is. So that's something that's allowed by the public law, that they can use that as credit in lieu of taxes.
No.
Are you reading that, Senator?
No,
Actually, then? Okay, so I think it's allowable that interest can be used for to offset taxes as credit in lieu of taxes. I mean, in lieu of cash. So the question I think that we're raising now, does it cap at that point of time when they come in and basically say we want to take this as credit against any local taxes? That's the question that we're looking at now. Or whether the balance of the principal continues to earn interest.
No, but if specifically with taxpayer C, he owns half the land. So you give him $10 million in tax credits. He takes the tax credit that you've given him. He's holding on to it. It's now April, just about. 7 months have lapsed. He's not redeemed any of the 10 million. Is the interest still accruing from last August?
And that's what we're trying to say.
Senator, that's what I said. I'm going to post to the AG's office because I had that question, the same question you have.
And this wasn't clarified or agreed to between yourself and the taxpayer when you issued the credit?
It's not clear in the law.
I understand, but
so
you
that's
didn't.
why it's.
There's no agreement.
The issue of selling it and allowing somebody else to redeem it.
No, that's a different
It's not clear in the law.
Yeah, it's.
Are the
so
two of you
that one
aware of the
also-
Attorney General opinion from 2009 as it related to the COLA? And using the tax credit, using it to pay for taxes? The COLA certificates?
It
when they were-
continues to accrue interest.
No, I understand, but the Attorney General said that without specific authorization to use a certificate or their tax credit, it could not be used to pay for taxes without specific authority. And that's why at that time when
But
we
the
are
authority
considering
is
it under COLA.
in Public Law 1469 to use tax credit.
That's what I'm saying. In 2009, the Attorney General said it had to be specific authority. It had to be specific as it relates to the amount for the soccer field. It had to be specific as to the amount for the paseo. It had to be specific to the amount that the university might or could use for building the fields up at the university. But I'm trying to figure out whether or not there was a specific, even in 14, whatever it was, 77.
1469?
69, that there was no specific amount, authorization for that.
It caps at the amount of the property that is being acquired. And then it was the court judgment that imposed the 6% interest. So that's where it didn't cap it. So because of the court judgment, we have to give the 6% interest. It wasn't, the law didn't say that. But
I think the law does cap it at the amount that the taxpayer elects. If I was reading that I know there was a question that there's no cap into this particular credit, but if the owner elects that he has so much that is owed to him, that is the cap. The regulation guard even specify that if he takes it in 1 month and it's still a balance, he can take it to the other month. If it takes the whole year and there's still a balance, he can roll it over to the following year again. In other words, the cap is whatever was
I understand. I was just trying to figure out whether or not if they took 12 or 15 months or even 3 years, whether or not the 6% continued to accrue during that period. But you're going to get that answer from
Yes.
the Attorney General. You didn't have that clarification or that understanding when you issued. Just a last assurance that I need and have this on the record, Ms. Minglonia. Is it your statement today that regardless of the amount of the tax credits that are being redeemed against alcohol and tobacco taxes, that it is the position of the administration to keep whole and make whole all of the appropriations that we as a legislature authorized, appropriated through the Healthy Futures Fund?
Yes. Whatever allotment is received, I go by allotment, whatever BPMR releases
And
to the Department of Administration, and it is recognized as revenue, so that's how we have.
And the Healthy Futures Fund
2013.
was supposed to have about 16 million last year. So if the revenue was
still considered-
16 or 17 million dollars,
Yes,
but over the year, various corporations or individuals
use tax credits.
use tax credits to the amount of 8 million,
Yes,
and the fund is short cash.
that's correct, yes.
It is your
We still
assurance of
recognize,
this.
yes, we still recognize the revenue, so
You
we-
still recognize the
yes.
revenue, and you will keep and make whole
Yes.
Department of
The Cancer Fund, I know you're very concerned with
Cancer
that.
Fund,
Yes, that's correct.
Behavioral Wellness, every single agency
Yes.
that's listed on that. But you assure us at this point that you will keep that whole.
Yes.
Okay.
Just a quick question before we wind down. This whole landfill issue was addressed before I came into office, but I just wanted to clarify, we actually condemned the landfill property? The government actually condemned that
It was
property?
by eminent domain in 2008.
Okay. It was an eminent domain.
I was probably, yeah.
It was
It was
eminent
condemned,
domain. It was
yeah.
condemned, and then we
It was not the choice of the landowners that, it was the government that took the property.
And so now it was the court judgment now that has made the condemnation price be what it was when they made the
That's
ruling,
correct.
plus interest accrued.
6%
Okay.
from 2008.
Okay. And as we work together to try and retire this obligation, I mean, I think what we brought up today was all very, very relevant. I mean, we need to make sure the credits that we're issuing are not going to offset critical things like cancer.
Yes.
We need to make sure that the amounts that we're authorizing in credits are not, I think it would be great for the people of Guam if we can make sure that's actually not accruing interest while it's already authorized.
That's correct.
Yeah, I think we need to work towards that. I think that we need to figure out, John, and maybe we can work more closely on how we can assure that we're still taxing these tax credits, because if they are payments in lieu of cash, they still should be taxed as a cash-like form of compensation. So we need to work together to make sure that we're still taxing those instruments. If the tax credits are being sold and they're being sold at a discount and then claimed at full value, I would say that that's almost like a capital gain. It's like claiming getting a zero coupon bond at a discount and then being able to claim it at par. So there's a lot of things that's come up in this hearing that I think are going to be very good for us to work towards. I share a lot of the concerns of my colleagues as well in terms of and what you stated in your opening, Benita. A lot of the tax credit things that we specifically authorized under law that Speaker Pangilinan worked hard on, that you very kindly recognized him for. I think that those kind of things have benefited our community a great deal. But it's when we begin to issue tax credits without going through the public hearing process and without actually having a separate law to authorize it that we start to have these kind of challenges. And when we go back to 1977, and I think it would have been much healthier for us to address the Luzon issue through a direct piece of legislation similar to what Speaker Pangilinan's worked on, that may have gone the tax credit route, maybe included a property for property swaps. It probably would have been good to go through that process also, so we could have clarified if the tax credits would have halted the interest accrual process. So going forward with tax credits, and we do have a bill that we introduced, but I think it'll just be healthy for our whole community if we can bring any future tax credits into the public domain and have us have a dialogue about it so we can fully assess the value or lack thereof that it will have for the benefit of our community. But I thank you both very much. One of the, Speaker Pangilinan.
I just wanted to clarify on the Luzon issue that the total judgment in the lawsuit was the 21 plus the 3.4
Yes.
that was deposited.
Yes.
But that's not for acquisition of land. The 21 was for economic damages to property that the landowners continue to own. So we only acquired maybe 1/10 of the property. And in the court case, the judgment of the additional 21 is for economic damages because now the landowners have a property next to a landfill. But they get to keep that property. So we did not buy that. We did not condemn the property itself.
That's very key then, Speaker, because 1469
Yes.
only authorizes tax credits for condemnation. And condemnation means that we actually acquired the property for the government and it's within the domain of the government.
This is
And so
for-
if we're issuing tax credits for economic damages and not for actual condemnation, then we have an
this is
issue.
the judgment said it was for eminent condemnation, eminent domain. That's what I read in the.
But the judgment was.
Can we have that on the record, Speaker?
Yes, the total judgment that totaled a little over 25 million, 3.41 was for the condemnation of the property in which the Luzon landfill sits on today. The additional 21 million was for economic damages for the surrounding properties of that, which remain in the possession and ownership of the landowners.
It's saying here that the government of Guam plaintiff versus 1.3
Yes,
million square meters.
That's correct.
For
yeah, I don't dispute any of that.
and this is for eminent domain action.
That's correct. I don't
So,
dispute, so.
Eminent
But I'm
domain
just-
is condemnation of land. That's my understanding of what
But-
eminent domain is.
Yes, but the judgment is, there's a separate judgment for the acquisition of the physical landfill itself, and then the balance of the judgment was for economic damages to the surrounding properties.
And it says here in the last paragraph, it says, it is hereby ordered, adjudged, and decreed that landowners have judgment against the government of Guam in the amount of $25 million. So I don't know how much more clear can that be.
No, that's
That it's
fine.
for eminent
I see
domain.
where that was, but that's a very interesting point that Speaker Pangilinan brings up, because if tax credits are authorized in 1469 for condemnation of property, and I remember when you were reading it, it specifically said condemnation of property, we need to be very, very diligent in determining exactly how that definition of 1469 relates to the judgment of the courts and what exactly it is that we're having to compensate for.
Yeah, but Senator, I just read to you what the decree from the judge is.
Oh, that's fine. But if the judge's determination...
It's for landowners for the condemnation, so I don't know how much more clear we can be.
No, but then if the judge saying condemnation, then what does condemnation mean for the government? Does that mean we own that property?
It's eminent domain. You only condemn properties through eminent domain.
No, I understand, but what does it
Yes.
mean when we condemn it? Do those properties now belong to the government?
That's correct.
Okay, so all the property that we've
That's,
claimed on... For,
whatever the agreement was, but I'm just going by the
no, I
decree from
understand.
the court.
But yeah, I think that's something that
But
we need
anyway,
we all need to
I think we're
look at
done.
and clarify, because if it was tax credits for condemnation, how is condemnation defined with respect to 1469 and with respect to the court
It's
order?
condemnation is taking of private property.
No, I understand,
Yeah.
Benita, but what I'm saying is, if the court order is for compensation for damages, that are not.
But the court order didn't say compensation for damages. It's compensation for landowners
Well, I think that we're going to have to
for
clarify
eminent
that.
domain. So
Because
anyway, like
one of the
Senator
questions I had from my
Pangilinan said,
staff,
we're not
because-
lawyers, so here.
No, I understand.
I think this is
But no, but the
this is a
reason we're having this,
fruitless,
no, it's not frivolous, Benita. I think it's necessary
no, I
for us
didn't
to
say.
have the
I
dialogue.
didn't say frivolous. I said fruitless.
Oh, fruitless.
Because
I
we keep
definitely
going
don't-
around and around.
I definitely don't
So
think it's
because
fruitless.
you are not a lawyer, I'm not a lawyer, and we're trying to make legal interpretation.
Oh no! What we're doing is we're having a dialogue on things that we need to look at more closely, and
Yeah.
definitely talking to the lawyers is something that we need to do at this point because, and that was something I was asking myself. What's the size of the dump exactly in terms of a land area? No, in terms of acreage. I remember someone was sharing with me the acreage size, and I was just totally shocked that a $30 million judgment would be for that amount of property, for that amount of acreage. And if we are paying $30 million for condemnation, and that means that $30 million in condemnation should mean that total amount of acreage now becomes the property of the government of Guam. But if that $30 million is not for condemnation because we're going to acquire the property.
Senator, we're questioning the judgment of the court here.
No, I'm questioning the interpretation of the government of Guam with respect to applying 1469 to the judgment of the court.
Yeah.
If the judgment of the court is saying that we're going to compensate for the condemnation of land and for damages, then we can only apply 1469 to the condemnation of the land, not to the damages.
It all relates to the,
So let's
to
make
the
sure
landowner.
But 1469 is specific to condemnation. So we need to look at that closely, guys. Let's make sure that we're
Okay.
not issuing tax credits for damages and in lieu of condemnation. That's something very, very different. So let's just get a closer look at that. Speaker Pangilinan, I know that you're going to be very diligent on that as well. But the committee thanks you so much for your time. Getting together and talking about money is always, they always
Always
say,
exciting.
they always say in families, never talk about money at the table, but we always got to sit down at the table and talk about the people's money. But I thank you all very much for joining us today. I thank my colleagues for their time and their attention. Senators, very good work today. I'm grateful for the committee for putting in their efforts. The oversight hearing is hereby adjourned at 3:50 this afternoon. Thank you very much.
Thank you.